Have you ever wondered if you're going to need to pay taxes when giving or receiving a gift? What does the Bible say about gifts and giving? Well, stay tuned as we dive into the world of gift taxes on today's show.
Welcome to the Ask Ralph podcast. We're listening to an experienced financial professional with over 30 years of experience can help you make sense of confusing questions, current headlines, and industry trends about taxes, small business, financial decision-making, investment strategies, and even the art of proper budgeting. Ask Ralph makes the complex simple by sharing his real-world knowledge from a Christian perspective with all things financial. Now here's your host, Ralph Estep Jr.
Welcome to our Tax Talk Thursday. I'm so glad you chose to join us. I just want to thank you for listening and, more importantly, supporting the program. I'm coming to you from the Estep Farm, and it is a beautiful sunny day here today, and I'm recording this from the Saggio Accounting Studio. So let me put on my podcaster hat and put down those overalls, and let's push that adding machine to the side, and let's get into some financial wisdom from a Christian perspective. Today we're talking all about gift taxes. What are they, and how do they impact both the giver as well as the receiver of these gifts? I know the topic of taxes isn't always the most fun, but understanding gift taxes can save your loved ones big headaches down the road. As 2 Corinthians chapter 9, verse 7 reminds us, God loves and honors generous giving when it comes from the heart. So let's unpack what you can freely give and receive without tax troubles getting in the way. Now, don't forget to subscribe to the show and join our email list. You do that at AskRalphPodcast.com so you don't miss tomorrow's show. Tomorrow, I'm talking about self-storage. Is it your friend or is it a money-sucking foe? That's right, folks. We're going to talk about the value and maybe the exorbitant costs of self-storage and whether it's a good decision for you. Well, let's start with today's Bible verse. As I said, today's Bible verse comes to us from 2 Corinthians chapter 9, verse 7, and it says this: Each of you should give what you have decided in your heart to give, not reluctantly or under compulsion, for God loves a cheerful giver. I think that's a great way to start today's episode. So let's start by asking this first question. Ralph, what exactly is a gift tax? Well, simply put, it's a federal tax that applies when you transfer property or cash to another person for nothing. They're not buying it from you, or significantly less than it's worth. There are exclusions and exemptions, but essentially, gift taxes come into play when money or assets, those are things that you own, exchange hands, and the giver doesn't get something equal in value in return. So you're giving something to somebody and they're not giving you something back. The government wants their slice of large financial gifts to prevent people from avoiding paying estate taxes when assets pass hands after someone dies. That's the whole point here. The government wants to get their hands on those things that are being transferred from the person who passed away onto the next person. Generally, and this is a general statement, you won't owe ordinary income tax on gift money you receive. So in general, from a very high level, if you receive a gift, you generally aren't going to pay any tax on that. But for the giver, that's the person who's giving the gift, you might owe gift taxes when the gifts you give over a lifetime and at death exceed the lifetime gift and its state tax exemption amount. We'll get into the details of that in a moment, which right now is set at $12 million. So to be frank, it's not going to affect many people. But again, there are exceptions and exclusions that mean most everyday folks don't need to worry about owing gift taxes. Well, let's break down those exceptions. The most common gift tax exemption is called the annual gift tax exclusion. This means any individual can give up to the annual exclusion limit per recipient each year without having to pay gift taxes on it or report the gift to the IRS. Now, in 2024, this annual amount is $18,000. What does that mean, Ralph? Well, that basically means that each person can gift up to $18,000 per person per year with no tax implications. So, for example, let's say you're a family and you have 3 kids. You and your spouse could each give a gift of $18,000 to each child without any reporting requirements or owing gift taxes. That's $108,000 in tax-free gifts between the two of you to your family that year. So that's $18,000 for you, $18,000 for your wife, times 3, since you have 3 children. This applies to any individual you gift money or assets to. These could be your relatives, your friends, could be peers in church, even rolling over inheritance into a spouse's name without needing to report it. There's no limit on how many separate gifts can qualify for this annual exclusion. So if you've got a host of friends, you got 30 people that you want to give $18,000 to each, you can do that without triggering any tax issues. If you're giving above that $18,000 to someone, the excess gets factored into what's called your lifetime gift estate tax exclusion, which I mentioned a little while ago is $12 million in assets. That's what you can give before you owe any taxes. And truth is, look, for 99% of people, we won't ever hit that limit on our lifetime gifts or estates. But talk to a tax pro if you have any doubts. Another exception is not having to count gifts used to pay certain direct medical expenses, if you pay medical expenses for someone, or tuition against the annual or lifetime gift tax exclusion. So funding medical procedures or college tuition for loved ones also avoids gift taxes without dipping into your $18,000 annual exclusion per recipient. So here's the thing, folks. Clever gifting strategies like these help assure gift taxes never keep you from generous giving. And that's the whole point. We want to figure out a way to help you to be a generous giver. Now, what about on the receiving end? Do you owe ordinary income taxes when given cash or assets of a gift? And like I said, generally, the recipient of a gift does not have to pay income taxes on the value of that gift. Now, some specific examples like inheriting an IRA or a 401k, you may have distribution taxes to the beneficiary, but gifts wouldn't create that taxable event. So in other words, if someone gifts you at the time of their death, their IRA or 401k, you really take the role as a beneficiary, and that tax rule is completely different because that is pre-tax money. Again, I'm going to recommend you talk to a tax pro if you have specific inheritance questions. One area that commonly trips people up, being given a sizable gift to help with a house down payment. I get this question repeatedly in my practice, and here's the answer. Even large cash gifts for a home purchase do not create taxable income. But here's the deal, folks. Make sure the gift giver properly reports the gift if it is over the annual exclusion amount to avoid issues with the IRS on their own gift tax returns that they need to file with the IRS. So if it's going to be over that $18,000, there may be a tax return it needs to file. But the good news is no income taxes for you, the lucky recipient. So if your folks want to give you money for a down payment on a house, there is absolutely no tax consequence to that gift for you being the receiver. Now, your folks may need to file a tax return. That's where they're going to want to talk to a tax professional like myself about that situation. So let's talk for a moment about what is called the lifetime exclusion. You've heard me mention that a few times. The lifetime exclusion, or you've heard it called the lifetime gift and estate tax exemption, works together with the annual gift tax exclusion, but they serve different purposes. Here's an explanation. The lifetime exclusion refers to the total amount you can give away tax-free during your life or at your death before owing any federal, estate, or gift taxes. This lifetime exclusion amount is over $12 million per individual. That's now in 2024. And it includes all taxable gifts exceeding the annual exclusions given over your lifetime, plus the total value of your estate when you pass away. So what is Ralph really talking about here? If the total value of all the things that you own on the day you die is less than $12 million, then there's never going to be an estate or gift tax issue. Only on very large lifetime gifts or estates exceeding the $12 million plus lifetime exclusion would have to pay any gift or estate taxes. So how does the annual exclusion fit in? It's a very good question. The annual gift exclusion allows individuals to give up to $18,000 per year. Now, like I said, that's according to 2024. Per recipient without accounting against that lifetime exclusion amount. Annual gifts under the $18,000 aren't reported or tracked because they don't reduce your lifetime exclusion amount. Basically, what I'm saying is, if you have a very large estate that's getting close to that $12 million mark, one of the things you might want to consider is gifting that money each year to reduce that value of that estate, because these $18,000 annual gifts do not count against that lifetime exclusion. So let's say you had 3 or 4 kids. You and your wife could each give, like we talked about earlier, that $108,000 a year to reduce that lifetime exclusion amount. In summary, lifetime exclusion, gifts or estates values beyond $12 million, then you're going to hit that gift estate tax limit. The annual exclusion, we talked about this a lot today. $18,000 in annual gifts to each recipient aren't reported or counted against that lifetime amount. So the two exemptions work in tandem. They work together. The annual exclusion enables tax-free smaller gifting without tapping into the bigger lifetime exclusion cap each year. Now listen, folks, most people will never exceed either limit. but they give substantial tax-free gifting flexibility. Before we wrap up, I want to remind our listeners to visit our podcast page. Do that at AskRalphPodcast.com. There you can leave us a review, share your thoughts, or even send us a message with questions for future episodes. We're building our calendar right now, and if there's a topic you'd like for me to cover, I would love to hear from you. Make sure while you're there, you join our email list so we can send you our daily email with what's going on with this show. And if you have a specific question, you can also schedule a consultation with me. For example, let's say you want to talk about some of these estate or gift tax issues. Be happy to meet with you. We can do a Zoom meeting, but you can schedule that right from the website. And here's one thing I want to ask you to do. If you know someone who is considering giving a gift or will be receiving a gift, do me a favor and share this episode with them. It might be a great starting point for them to have these discussions. To recap, the key takeaways on gift taxes are these. Gifts up to $18,000 fall under the annual exclusion limit each year, and they're not taxable, and they don't use up that lifetime gift and estate tax exemption amount. Direct payments for school and medical expenses also avoid these gift taxes. Recipients don't owe income tax on gift money, and as we talked about, the lifetime exemption over $12 million means most people won't ever get close to owing actual gift taxes. So let's talk about some actionable next steps. If you've been blessed enough to gift money over $18,000 to loved ones or receive sizable gifts yourself, talk to a tax professional to make sure they handle the reporting properly on your returns. And always, always, always get valuations on any non-cash asset gifts. Those would be things like maybe art collections or something like that. And if giving money for a specific purpose like education or medical expenses, make sure you document how those funds were used. Get a copy of the receipt, get a copy of the medical bill or the tuition bill. Staying organized with good documentation helps everything pass IRS scrutiny if those tax forms ever get reviewed later on. So have the proper documentation. Proper planning sets up both the giver and the receiver for smooth sailing. And as the Bible reminds us, approach gifting from a heart of generosity, no matter the amount. Our riches come from above, so stay focused on stewarding worldly goods rather than being anxious about every tax consequence. Seek wisdom and righteous motives. I pray your talk today has blessed you with greater confidence to give freely, receive thankfully, and nurture an attitude of generosity that honors Christ. Again, head over to our website at AskRalphPodcast.com and share this episode on gift taxes if you found it helpful. Please feel free to reach out with any follow-up tax questions anytime. And as I always say, stay financially savvy and God bless you today.
Thank you for joining us on the Ask Ralph podcast. And with a simple click to subscribe, we'll invite you back to our next episode. And remember, financial issues don't have to be complicated. Just ask Ralph. The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media, Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.